Insolvency experts warn that businesses need to gear up for the worst inflationary environment that will increase the cost of doing business, squeeze margins, and raise the probability of a recession. And with the rand tanking now, there's a lot to consider. But how can businesses avoid failure and insolvency? To help me unpack is Tobie Jordaan, who is the Director of Dispute Resolution at legal firm Cliff Decker Hofmeyer. Thank you so much for your time, Tobie. Let's start here. What knock-on effects does inflation, rising interest rates, and other economic fluctuations, such as the rand tanking, have on businesses?
Morning, Michelle. Morning, all the viewers. I think you can slightly rephrase that question and look at it as just a level of acceptance that there are tough market conditions out there. Consumers are struggling. We know that inflation is on the rise. We know that interest rates are spiking. We saw that the rand has hit over 19 rand against the dollar. The basic answer to your question is that it means that we require a level of acceptance from companies that are in distress to realize that it's not going to get better anytime soon.
And how should those South African businesses gear up to avoid insolvency? Because it's good and well to know that tough times are ahead, but how do you prepare your business so that it does not fail in those tough times?
Sure. As I said earlier, a level of acceptance is required immediately by the board of directors of companies that are struggling or that are financially distressed. And what I mean by a level of acceptance is that about 3 years ago, when we were in the midst of COVID, everyone thought that it's not necessary to take urgent steps to put your company under business rescue because everyone was hoping with this expectation that things will get better. Currently, we're faced with doom and gloom. And my first point of advice would be a level of acceptance. Accept that you require help. And then secondly, timely intervention. It's so important that a company that's financially distressed take immediate steps at an early stage in order to get to a successful business rescue. What I mean by timely intervention is seek legal advice, start talking to your lenders, make sure that you have a line of communication open, make sure that your financial information is up to date and are reliable. Banks tend to rely heavily on the financial information at this stage and also to determine what the forecast of the company is.
And just a little pushback, Tobie, on business rescue. Does it really provide a solution for businesses in distress, or does it sometimes become an additional and costly headache?
So it depends on the company. It depends on the trading activities of the company. It also depends on the timing of the commencement of the proceedings. Business rescue certainly can work. It provides a moratorium against all legal proceedings, so it provides a safe bubble and breathing room for a company to restructure its affairs. As I said, it depends on the trading activities, it depends on the level of management input, it depends on the company itself and the level of debts to determine whether it will be successful. It's not a cheap exercise, but there is sufficient hope that you can restructure a company through a business rescue to justify, I think, the fees that could be incurred through a business rescue process. It is really a valuable tool if used correctly and at the right time.
And Tobie, let's talk a little bit about the rand tanking. And of course, we heard the SARB warning that with the rand tanking, we very likely to see a continuation of the interest rate hike that affects consumer and business alike. Talk us through what that could mean for businesses, specifically smaller businesses that are trying to survive and ride out the wave.
It means a couple of things. I think the 25th of May is a deadline that's hanging over businesses and consumers in South Africa, wanting to find out whether there will be any further interest rate hikes. Effectively, what it means is twofold. From a lender perspective, is that the banks are becoming reluctant to lend out more money to companies that are distressed in order to restructure or to recapitalize. So therefore, the level of capital that will be available could be limited. And without further money to take you through a distress opportunity, that should already be a reason for businesses to consider filing for business rescue, or rather, if it's too late, to file for liquidation. From a consumer perspective, it means that consumers will have less money in their pockets to actually spend at the retail outlets. Retail sector is specifically a sector that's on the forefront of everyone's minds as to whether that will be the hardest hit as a result of the interest rate hikes and the inflation increases. So it's not good news when there are rumors going around that there are potential further interest rate hikes.
Yeah, a lot of bad news, it seems, that businesses are getting. Tobie, before I let you go, can you just give us a global perspective on how businesses are dealing with inflationary pressure compared to South African markets and the rest of the continent? We know that the US is having similar challenges when it comes to inflation. Globally, how are businesses dealing with that?
So that's correct. Maybe another example from an Australian perspective is that the Australian news agencies have recorded that pre-COVID, they now see more businesses going under, filing for liquidation than even before COVID. So they're sort of back to where they were before COVID hit the shores. What that typically means is, in following a trend in South Africa, is that we're slightly behind the trends from our foreign counterparts. And it means that if that's already been surfacing on an Australian level, and as you mentioned, on a US level, it just means that it is coming our way, and we're probably a couple of months behind.
Tobie, thank you so much for those insights. Of course, that was Cliff Decker-Hofmeyer, Director of Dispute Resolution, Tobie Jordaan. Michelle, it's back to you.